Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday. It's May 23rd, 2012. We're getting some mixed signals in the market, which can make it kind of difficult to determine which direction you should be trading. So let me kind of clarify this and get rid of some of this smoke for you guys. We're looking again at the U.S. markets. I will be updating the European markets and maybe the Asian markets as well this evening when the charts are updated, the end of day charts are updated. There we kept on our free website at PerfectStockAlert.com, so if you want to see that information, you can check it out there. Now, right now, let's get started with the Dow Jones Industrial Average. This is a position here that I would actually start shorting, and it's the only one in the U.S. markets that I would, again, start shorting. And you may get stopped out of this temporarily, but you want to be staying on the short side for a couple of reasons. First off, today, or yesterday I should say, we had a nice little reversal signal here, but it was kind of weak, and we don't want to jump on the short side just yet, because like I said before, this move to the upside is very weak, and I had actually expected to go a bit higher before reversing, but that didn't happen. She started moving lower, and we talked about this yesterday. I wanted to see more confirmation, meaning that the following day after this day would be a lower high, which we got, and then a lower low, which we got as well. She also took out this low point here. So that gives you all the information you need to know. The direction of this is lower than we have already seen. We talked about that as well. We said this wasn't a hammer candlestick formation, therefore you're not really seeing a true bottom, blah, 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 blah. But anyway, so now we're looking at this chart and we're saying, okay, this is like a sell opportunity, so we're going to take that. But also, you can see that you've got a hammer candlestick formation here, or a variation of a hammer candlestick formation. It's actually not perfect hammer. But in any case, you may be looking at that thinking, well, is that a buy signal? In this particular chart, it's kind of easy to see that it's not, simply because you took out this low point here. That's not an actual true bottom here. So in this chart, it's pretty easy to spot. But the other charts, it's not as clear because your low point doesn't go as low. You'll see those in a moment. So it can be difficult to look at the market and say, man, which direction do we trade? The end of day activity that you saw in the U.S. markets today, where you saw that buying activity that actually bought all this sell-off back up and gave you that hammer formation there, is not duplicated anywhere else, meaning that it's only in the U.S. markets. What's driving markets lower is, of course, the European financial crisis. That's the key factor here. Well, if you look at their charts, you're going to see that they're actually not showing hammer candlestick opportunities for buying activity. They're showing going lower, and that's going to, of course, pull down the U.S. market. So taking a short position here makes sense to me, but I'm only taking one because there is still potential for a bounce to the upside here, and if that happens, you could get stopped out. Well, I'd rather get stopped out of one chart rather than several, right? So I'm taking it slow, kind of working my way on back onto the short position. We took a short position today on gold. We talked about that last night. Told you that was an opportunity, and if you had taken it, you made money. And let's look at some other charts. Okay, now at the NASDAQ, you can see that today's activity, we have a nice hammer candlestick formation here. But again, we talked about this before. You have a low point here, no hammer candlestick, then a bounce here. Kind of get a reversal signal here, but not a strong one, so I left it alone, didn't try to take it on a short position or anything like that. I wanted to kind of watch and see if we got confirmation. Then today, of course, we got a lower series of highs from one candlestick to the next, lower series of lows from one candlestick to the next. But in this particular case, the low point here is higher than the previous one. That can be getting people thinking that this is a double bottom scenario or something of that nature, where she's actually going to reverse to the upside and then be a good trade on the long side. Again, I wouldn't do that, though you can see a move to the upside, and therefore I'm not going to take a short position just yet. Just keep watching this one. Another thing to note here is whenever you look at the ultimate oscillator here and you come up there and when you fall below the 30 line, you expect to find a bounce at some point. You'd like not to take a short position when you're looking at that kind of a signal. It can happen on occasion, but typically you're not going to want to do that because you're too overextended to the downside. You're going to get a bounce. You want to take that bounce opportunity as you're short, but you want to wait until you get that sell signal, something like that, nice shooting star formation, when the ultimate oscillator has again moved off of the 30 line. And typically in a bear market, you'll see the ultimate oscillator peak at about 60. So back here you saw that. Be watching that. If you get up a little bit higher, you can see a peak here. So again, I would not be a buyer here. This market is obviously in a downtrend. In a bearish market, I would not be looking to buy. But I'm not just ready to sell this one just yet either, because I don't want to get stopped out unnecessarily just because we have another day to the upside or something like that. Wait for a good signal, and then we'll take a short position here. Right now, we don't have it. The Russell 2000 on yesterday, we talked about this as well. You have that little shooting star formation, a little bit of one, not really a perfect scenario, but in any event, she does give us a little bit of some sell pressure there. It starts to roll over. We said we want to see more confirmation. We got that lower high, lower low than the previous candlestick, all that. But then at the end of the day, she buys herself right back up, and you're getting actually right here kind of a kicking pattern where you're up and down, and all you're doing is moving sideways on this support of the 200-day moving average. So I don't want to short into that because it's really easy to get stopped out in this scenario for no real darn good reason. However, I will point out the ultimate oscillator again, 53.74. Typically you peak out at about 60 on the bear market. There you are, 60. So if you get up to that level, or even tomorrow you start to see a little intraday activity, something like that, and we could get a better sell signal that might take at that time. Again, this major support here that broke down right here is now going to be acting as resistance. So we are pretty close to that. I wouldn't be a buyer here, but I am looking for a short opportunity. I just want to wait for the right one so I don't get myself stopped out unnecessarily, right? All right, so right now what we see on all these charts that we've looked at, and we'll look at one more in a minute, but all these charts we looked at, we're seeing sell signals mixed with possible bottom signals. So which one of them is telling you the truth? Last one we're going to look at before we actually find the truth here is the SPX, the S&P 500 Large Cap Index. This one is giving us a much clearer defined sell signal here, and then we of course talked about this yesterday, being that I wanted to see more confirmation, lower series of highs, which we got today, and a lower series of lows, which we got today. But again, notice that this gets bought back up at the end of the day, shows a hammer candlestick formation, and she does not take out the previous low here. So you're going to get, again, that mixed signal. Is this a bottom that we should be buying? Is this a temporary bounce that's going to end up selling off again? Again, we'll point out the ultimate oscillators at 51.92. We expect it should be peaking out about 60-70 range. So that's something that we don't see a lot of upside here on the bullish trade strategy there, so we're not going to take that. But I'm still not going to jump on the short side either, even though this one I could do that. I could say short it, and keep a stop right here, 1 cent above that. If you want to do that, you could do that. You just use this range right here as your shorting situation. But again, I want to leg into the short position again before I jump on it. Let me show you why, and this is going to be the thing that actually clears all the smoke out of the screen for you. Check this out. Okay, this is the VIX, the Volatility Index. It runs the inverse of the S&P 500, and we talked about this one yesterday, but I want to give you a little more information here. Right now you can see the clearly defined counter signals that we're getting. We're getting a hammer candlestick formation on the VIX, which should be inverted on the S&P 500, meaning that you should see a sell signal for that day on the S&P, and you did. And then, of course, today's activity, you're getting a sell signal on the VIX, which means you should be getting a buy signal on the S&P 500, which, of course, you are. And we just showed that. So what this is showing you is the exact same thing the other charts are showing you, is there's this confusion here. Which one of these signals is accurate? And the truth is, temporarily you could pull back more, which means temporarily you could go a little higher in the overall markets before you actually break down. However, that's temporary, and what's really going to happen, what's the thing that I would bet on, is the fact that you're actually going to go higher in the VIX, which means you're actually going to go lower in the S&P. How do we know that? Because this over here was resistance. It was resistance here as well, here, here, and here. At that time, you had a wall that you couldn't break through here. At the same time, in the other charts, you were flipped, of course, so you had buy pressure there, and you couldn't break through that. Then we told you that those markets were, in fact, going to break through that support. At the same time that that happened, you saw a breakthrough of the VIX of that resistance. So now that resistance is going to be acting as support. That's why you got a hammer candlestick formation here. So if you were to get a sell-off here in the VIX, it would be temporary before you come down to this support line. You can actually fall below this support line, but it will be stupid. It would be a waste of time. You want to buy that because this support is still there, even though you can sell below it. And you will eventually reverse back up here and come back and find support there and then continue moving higher. So in any way you look at this, the upside potential to the markets is very tiny, and the actual true direction of the markets are down, and the true direction of the VIX is up. The true direction of the markets could also be determined by looking at Europe, which is actually the driving force lower. We can see that they're actually trading lower as well. So there's nothing out there that you don't get thinking that you see a hammer candlestick formation and you should be a buyer. That's not what you're actually seeing. You're seeing mixed signals. Someone's trying to bait you into buying, and you don't want to be doing that. If you've not been to our free website at perfectstockalert.com, it is right there. It's 100% free, and all we ask in return, please refer a friend. God bless, take care, enjoy your evening, and I will see you all tomorrow. Also, be sure to check out the free website at perfectstockalert.com for the updated charts on the Europe and Asia. When that data gets to me, I will update it and put it on the website, okay? God bless, take care. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.